do with the stock of Nvidia now that it's trying to buy ARM Holdings, the British semiconductor design company with a ton of smartphone exposure? When we first learned about this cash and stock deal a week and a half ago, the largest semiconductor merger in history, Nvidia stock roared higher, gaining more than 5% in a single session. Since then, though, the market's been flooded with red-hot tech IPOs, and Nvidia stock has sold off hard because it's exactly the kind of high flyer that money managers sell when they need to raise capital to buy an initial public offering in another high flyer. I actually like this pullback, though. I like it. I think Nvidia's stock is a terrific buy right here if, and it's big if you believe it can close on ARM. The deal would be a game changer, assuming it's allowed to go through. Combining Nvidia's terrific gaming and data center platform with ARM's massive smartphone and processor ecosystem. Put them both together, and you have got the undisputed king of the semiconductor industry. But a lot of people are worried here because we don't actually know if they can complete the deal. There are a ton of potential obstacles here, and they'll have to get regulatory approvals all over the globe. Regular viewers know that I've loved Nvidia for ages. You know, I renamed my late dog Everest after the company. Everest actually had a pass to get into Nvidia's headquarters. Do you have one of these? But the stock had a massive run this year, and without ARM Holdings, the story is just not as compelling. Thanks to the recent sell-off, though, you're now getting the ARM deal pretty much for free. And I got to tell you, I think Nvidia can pull this off. Last Monday, right after the news broke, I spoke to CEO Jensen Huang on Squawk on the Street. And Jensen told a monster good tale of synergies and industry dominance. You got to remember, Nvidia recently acquired Mellanox for more data center exposure. And that transaction, that was held up for ages by Chinese regulators. Lots of people wrote the Mellanox deal off. But Jensen repeatedly told us on Mad Money that he'd get it done. You just had to be patient. Sure enough, he delivered. And since then, the stock's been a magnificent performer. I learned not to doubt the hard-charging, leather jacket-clad genius who's unfailingly polite, genuinely funny, and loved by his employees. Even his competitors like the guy. So before we get into the nitty-gritty of what ARM Holdings means to NVIDIA, I want to make it clear that you bet against Jensen Huang and his team at your own peril. Of course, betting the deal gets done is also a gamble. But let's think about the potential payoff. ARM Holdings is an incredible asset. ARM's always been a little different. While their technology is integral to the mobile and Internet of Things revolution, the company's not technically a chip maker. They don't manufacture anything. Instead, ARM designs technology and then licenses it out to all sorts of other semiconductor companies. See, years ago, ARM came up with a better architecture for processors. They designed a chip that's much more energy efficient than the processors you'll find in most computers, which allowed their technology to take the mobile market by storm. These days, their tech is in everything. Autonomous cars, the Internet of Things, smart home devices, all sorts of automation, and, of course, your smartphones and tablets and some computers. ARM is basically an arms dealer to the entire semiconductor and device industry. They license their chip architecture, and then their clients can add stuff on top of that for specific application. Oh, it's a fabulous business, which is why NVIDIA is willing to pay up for it. They're giving SoftBank, ARM's current owner, $12 billion in cash on top of $21.5 billion in stock, which is roughly what SoftBank paid 4 years ago. And SoftBank poured a ton of money into ARM after the acquisition, making it a much better company than before it went private. They're also a $5 billion earnout construct, cash or stock, that goes to SoftBank as long as ARM has hit certain financial targets. And on top of that, NVIDIA is issuing $1.5 billion of stock to ARM employees. When you add it all up, now we're talking a $40 billion deal. You know what? I think it's worth every penny. And the market clearly agrees, which is why NVIDIA rallied so hard when the news was announced. When I spoke to Jensen, he raved about this business. Listen to this.
ARM is an extraordinary company. This is the company that built the world's most popular CPU. It has built 180 billion units over its course of its history, 22 billion of it just last year. And so they're in everything. They're in everything.
They're in everything. So Jensen wants to take NVIDIA's phenomenal artificial intelligence technology, which is the most important technology in the world right now, and basically fuse it with ARM's processor architecture and map it all up, of course, with what NVIDIA has. So here's the pitch.
If we could leverage their business model, if we could stand on the network that they've created and take the technology we've invented and put it into that channel and make them available to their thousands of partners, the economics for us would be incredible.
In other words, the two businesses are complementary, and yes, it would be lucrative. The combined company will be able to offer customers a full-stack solution. NVIDIA's powerful graphics processors coupled with ARM CPUs. Wow, we're talking about all this computing power for a given device in a single package that doesn't generate a lot of heat. According to NVIDIA, their ability to offer a full-stack solution could create a $250 billion opportunity by 2023. Tesla's not even saying that, okay? If they can get the deal done, NVIDIA will be able to the 2020s what Intel was to the 1990s. Yes, that is the analogy. In 1990s, Intel was quite sainted. Can they get it done? On the one hand, ARM's not really a competitor. When it comes to antitrust, that's normally a pretty good argument. However, so much of the world runs on ARM's technology that any change to their business model would have massive ramifications, and that's bound to make some regulators nervous. NVIDIA's chips already have near monopoly on cloud-based artificial intelligence, but that's just because of sheer brain power. Now, ARM would give them even more clout. This deal makes them the king of the data center. Some regulators may not like that either, especially overseas, even as it might make the data centers run less hot, quicker, and better. And that should matter, right? On top of that, some of ARM's existing customers might not be too thrilled. I mean, they got into bed with a company that simply licenses out technology. They didn't get in bed with another chip maker. Excuse me. NVIDIA said they won't mess with ARM's business model. And I think they can solve this problem by putting that in writing. Codify the open licensing model as part of the antitrust approval process. Hey, speaking of antitrust, the argument here is that an NVIDIA-ARM combo would simply be too powerful, even though they're not direct competitors. Too much concentration. But when I spoke to Jensen, he sounded confident they'll be able to get regulatory approval even in more hostile jurisdictions overseas, although it might take some time. I'm betting this thing doesn't close. It might take 18 months. Look, geez, it could take 2 years, but it's worth it. Finally, you got to worry about China. The last time NVIDIA tried to make a big acquisition, that was that Mellanox deal, it got held up for over a year because the Chinese authorities wanted to use it as a bargaining chip in the trade war. Well, that could happen again. But you know what? There were countless bears who publicly stated that NVIDIA had no shot at all of getting Chinese approval. In the middle of a constantly escalating trade war, they pronounced the Mellanox deal dead. They turned out to be dead wrong. And now NVIDIA has a lot more experience navigating China's regulatory apparatus. Plus, look, if Joe Biden wins the election in November, these trade wars, those worries, I think, go out the window. Here's the bottom line. If NVIDIA can close on ARM Holdings, the stock's going to be unstoppable, even after its magnificent multi-year run. I think Jensen Huang can eventually make it happen. But what if I'm wrong? Look, the stock was at $486 before the ARM news, and it's only at $494 now. I like that risk reward, even as the stock stood at just $172 1 year ago. Okay, we got much more Mad Money, including my sit-down with Sanofi. How is the company positioning itself in the COVID-19 vaccine race? I've got the exclusive. Then, do your stocks have what it takes to survive the unknowns in this market? I'll be the judge of that when we play MI Diversified. It's been a while. And how about Abbott Labs bringing back normalcy to the country? I think it can happen, but you got to stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.